Hi everyone, hope you guys are all having a great day today. In today's video, I'm going to cover the whole entire market in terms of Dow Jones, Nasdaq, and S&P 500, including the economic calendar. Now, I do post these videos daily, so I highly encourage you to double check the latest video on my channel, so that way you get the most up-to-date information. Before we get to the analysis portion, I'm going to go over the economic calendar. And for Friday, September 6, 2024, at 8:30 a.m., we have U.S. employment report, as well as U.S. unemployment rate. And then we have U.S. hourly wages year over year. And then at 8:45 a.m. we have New York Fed President William speaks. And then at 11 a.m. we have Fed Gov Christopher Whaler speaks. The market is basically anticipating for the data report in terms of employment report and unemployment rate, so on and so forth. So previously it was 114,000, and expectation this time around is about 161,000. And even without the data points, to be honest, if you're looking at MACD lines, so I'm going to show you what I mean. So here's the MACD line, indicates if we're in a bearish or bullish movement. And as you can see for the 1 year chart for the Dow Jones, we're in the bearish movement and anticipating more downside, right? Now, even though hypothetically, you could argue that we are at levels to bounce off. This is an upward trend resistance line dating back since 2021. And we did already bounce off it a little bit. And you could assume that potentially we're going to bounce off it again. But in essence, for the most part, it looks like based off the trajectory. So this is just the Dow Jones. So I'm going to go over the SPY and Nasdaq and Dow Jones. But in the 1 year chart, like I stated, bearish movement. 5 year chart potentially crossing over to the downside, and then the all chart potentially trying to arch down as well, potentially. But for the S&P and Nasdaq is more prevalent to the downside. So this is the SPY ETF for the S&P 500. This is the all chart showing a potential downside, but the 5 year chart is already into the bearish movement and showing further indications of downside. The 1 year chart, still strong downside bearish movement. And the Nasdaq, looking at QQQ, ETF for Nasdaq. This is the 1 year chart, again, bearish movement, so indicating further downside. 5 year chart, strengthened downside pull. And then the alt chart, indicating a potential crossover. Again, this is technically bullish, in the bullish territory, but it's still arching down, where it's not a guarantee it'll cross over to the bearish movement. It's not a guarantee we'll get pulled down. But in my opinion, it looks like a lot of things are pointing to potentially to the downside. Again, like I've stated in the last video, rate cuts are nice for the market, because usually if you get cheaper money, then you have more spending money, or companies tend to borrow more money because it's cheaper. Because if hypothetically interest rates were at like 1%, companies tend to want to invest into research development, because they're assuming that they could get more than 1% return on their investments, and so on and so forth. So it's used to strengthen the economy hypothetically when interest rates get lower. Not hypothetically, but that is the case. The only downfall is that they tend to lower interest rates when the economy is hypothetically not as strong. And we've seen multiple times in history where interest rates, when they start lowering it, the markets tend to potentially have a correction during that time frame. So if that is the case, then hypothetically, MACD lines with that case, we could expect potential further pull down, potentially. Now, obviously, there will be times there will be bounce offs, so on and so forth, recoveries, but that could be the case for the time being. Plus, mixed in with what I mentioned before, we have touched the all-time high zones. So this is the SPY ETF for the S&P 500, like I stated. And previously in July of 2024, this was the all-time high. Let me just zoom out so you can see. So we are at the all-time highs. And then we've tested again. So that was July of 2024. And as of recent, sometime in August, we've tested it multiple times, basically, and could not essentially break through to the upper highs. Now, can we go back again? Obviously we can. And again, this is always just my opinion, so please do your own due diligence and research before buying and selling. But you could argue that we are coming down from all-time highs and potentially seeing further downside, potentially. And then for the Dow Jones, the same thing. We had an all-time high back in July, and then we tested that zone. Now, we did have false breakouts. Again, this was in August, so July, August, so on and so forth. And we could not necessarily break through to go even higher potentially in terms of indications further upside, and so on and so forth. And you could argue we're coming down from the highs as well. And just to visually show zoomed out, that was the highs, so on and so forth. Nasdaq is the only one that's a little bit different, because for the Nasdaq, this was the all-time highs right about here, and we didn't necessarily go back up to them. What we ended up doing was this upward trend resistance line. So this was the previous highs. So back in July as well, all-time highs. What we ended up doing was we had issues because we came back underneath. I apologize, too many lines, by the way, but we came back underneath to this upward trend resistance line dating back since 2010 and had issues passing it. Yes, false breakouts, and you could argue my lines are not perfect either, but from the 2010 upward trend resistance line, which I'm going to show in a minute, we're basically coming down and potentially having further downside. And then to show you what that means, no, not what that means, but this upward trend resistance line since 2010 is this one. So since 2010, upward trend resistance line. Mind you, the market was still going up. It doesn't mean that it wasn't going up. It's just every time it went up to it, got knocked down, except through 2020 to 2022. Broke through, came back underneath, had issues passing it once again once it was underneath, and then this was the all-time high that I mentioned earlier, and then we were back underneath it again and having issues. So you could see, hopefully visually, when tried to test it again, could not, came back down, and then here was the July all-time highs, and then came back underneath it, and then tried to pass it, but now heading down. Now, just like the S&P actually, which I didn't really show fully, we could be coming back to this mid zone. There was a lot of times it came to the mid zone, and then there was times that it came down to this lower support, upward trend support level for major crashes. And you could argue we're coming to the mid zone, but we'll see, because if the Fed ends up cutting 50 basis points, because the expectation is either 25 or 50 basis points, but based off Jerome Powell's speech, for the last one, which the replay, I have the replay on my channel. It popped up probably in the beginning of the video, and he indicated that most likely it's going to be essentially 25 basis points. So if the market gets 50 basis points, which I know contradicts, not contradicts, but goes against what I stated in the beginning, where rate cut starts, then the market get pulled. But the thing is, though, there's times of momentarily going spike up market events where the market might get excited for getting 50 basis points cuts, because again, companies will take that money if it's cheaper for research development and so on and so forth. And that entails of like hiring more people and so on and so forth. So it does kickstart the economy in a way, right? So there is that benefit. So with that 50 basis points, I could see an uptick to the upside potentially, because expectations is more to the 25 basis points, even though it's 25 or 50. So there's that. Now, for the S&P, just to visually show, we do have more room to the upside. So this is the upward trend resistance line. Same thing for the S&P versus Nasdaq. The Dow Jones is a little bit different though, but upward trend resistance line since 2010. Now for the S&P, did not pass the upward trend resistance line. You could argue there was a couple of false breakouts if you zoom in more. And then there's two support levels, this main one right about here and this other one as well. But this last one is only 2 touch points. So it's arguably not, it's not guaranteed if it's going to be an actual upward trend support level in the future, because you have to have technically 3 touch points. But you could argue we're coming back down to this zone right about here, which is ways down, but we do have more room to go to the upside versus the Nasdaq, where there's technically not much room, unless you break out to, like I mentioned, the 2020 to 2022, because obviously I had a decent run up too. And that upward trend resistance line does act as support as well, as we've seen multiple times, 1, 2, 3 support levels. And I think there's been a couple times as of recent. But yeah, that's basically it. Not stating that there won't be, like, for example, hypothetically, in terms of dead cat bounce, like where we'll have updates. We will have updates. It's just right now, in terms of trajectory, it seems like there's further downside to come, just FYI. That's basically what I wanted to share. If you found this video beneficial, helpful, consider dropping a like. It does help out the channel, so thank you so much for that. I do appreciate it. And if you want to be notified when I do upload the next videos, consider following and subscribing so you'll be notified when I do upload them. And that's basically it. Thanks again for watching. Take care. God bless and peace.